Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. A mixed two-sided trade across the ag space overnight as we approach the pause. However, prices are starting to work higher nearly across the entire board here. Feed grains, corn, and wheat both looking about 3 cents better. Soybean prices range from about 3 to 9 better, with the nearby January contract leading the upward momentum. A little bit lower here in the meal, while bean oil is up about 85 points. Markets just continue to react to yesterday's news of China reportedly stepping up and buying at least 14 cargoes of U.S. soybeans, or roughly about 840,000 tons. This for D's Jan shipment. Some are reporting that this round of purchases by China could amount to 2 to 3 million metric tons and would represent China's largest purchase of U.S. soybeans since January. Even though these beans were purchased by COFCO, their state-owned grain trader, meaning that these purchases would not necessarily be subject to the recently reduced tariff on U.S. imports, they still likely come at a premium over what China could have paid for Brazilian soybeans. So obviously, this purchase was more political than economical, and a big step in China's commitment to purchasing 12 million metric tons of U.S. beans for the 25-26 marketing year, as the Trump administration has been touting now since late last month. Total sales to China right now are probably in the 1 to 1.2 million metric ton range, looking for additional sales, however. So obviously the markets will continue to react to any news here. The other big demand story from yesterday was the Mammoth NOPA crush figure from the month of October, where NOPA members processed a record 227.65 million bushels of beans during the month, or just over 7.34 million bushels per day, also a record amount. While still early in the 25-26 marketing year, it does appear the current USDA forecast of 2.555 billion bushels is too low. This for the 25-26 marketing year. I would look for a higher figure, probably in the 25 to 50 million bushel range in the December WASDE. With the huge production, however, bean oil stocks did rise 5% to just over 1.3 billion pounds, and that was just above the average trade gas of 1.257. UN's soybean balance sheet is looking tighter and tighter nearly every day. Question becomes just how much over Brazilian soybeans will China be willing to pay, which will go a long way at determining just how high prices will go, with really right now still no major weather threat to South American crops. Speculative traders, big buyers again yesterday across the ag space, about 22,000 contracts of beans, 12,000 contracts of corn, 6,000 to 8,000 contracts in the soy products and Chicago wheat. We've got the long position in beans now out to about 110,000 contracts, which would be the largest in 2.5 years. Still no update yet from the CFTC on updated schedule of their commemorative traders data. December corn pushing up and then above yesterday's highs and the new highs here for the overnight trade. Key resistance at last week's high at 442 3/4. Corn a follower right now. U.S. stocks are plentiful at 2.15 billion bushels, with a record export forecast to live up to. Fresh 17-month high in Jan beans as prices work their way into a gap area from the spring of 2024. Need to trade up to 11.90 to fill that gap. Bean oil flirting with its 100-day moving average. We're still a little bit shy of that. It comes in at 52.39. D's meal inside range there. New two-week high for Chicago wheat overnight, with resistance at the early November high at 555, the resistance at 540 for D's Kansas City. Markets here too. We'll be on the lookout for announced sales to China, as there were some rumors of their interest. A few more cargoes off the Pacific Northwest yesterday as well. Thanks for listening, everyone. Have a wonderful day.